Eric Muathe with Muathe.com. Here we have Starbucks all data monthly chart. Let's take a look at why there's an argument here that the stock is going into a different phase. Now, after a nice run off the lows here of late 08, early 09, and that we're calling that split adjusted, I believe, from the lower, let's call it about $4 to the highs of 62. That's a massive move. Now the question is, what next? Just want to show you what I think is indication visually that the stock is running into a different type of a setup right now. Probably the question is whether this is where it starts rolling over. Since this breakout here, let's throw it somewhere there. That breakout was very successful in helping the stock get out of this range, which is this period, and the stock has never looked back since then. During the breakout right here, so that was a successful entry there. Let's call it late 2010. So we can use this breakout level, just draw a line somewhere there. And what you can see is that over the last couple of years, every time the stock would come back to test this breakout line, here we have a nice double bottom sometime in 2012 for the lows here and here that was successful. We come and do the same thing here. We have triple bottom in 2014 for the lows here, here and there, which were also successful. Now what you see for the first time in a couple of years is, for the first time, it looks like we are breaking below what has been support. And that's why I'm saying it looks like here one can make an argument that the stock is changing its dynamics, probably setting up for some type of a deeper correction. Now that's the perspective from the bullish argument. Let's take a look at the other argument, which is from the previous break. We can see here there was a trend break sometime in late 06, early 07. So this break brought the stock off the highs and the stock went into a major bear market drop. So we can use that information and just draw a line. That break line should be somewhere there. It so happens the same break line gives us very nice lows. Again, we can see here we bounced on this red line for the lows there, and the same lows as the previous breakout line come into play. Again, we are seeing for the first time another break below that red line, something we haven't seen in a couple of years. The last time we broke below there is during this period here when we went into a major bear market. So now this is looking like one that could set the stage for a move lower. In fact, if you take a look at our minimum requirements, ever since the stock broke below here, below 54.70, which is the previous 2016 monthly closing low, the stock's been looking bearish and top heavy. So we need to watch this. Anything below 54.70 could set the stage for lower prices. And don't forget that the other minimum requirement is that we need one of the MACDs to be at 3-year lows. And you can see that the stock's been trading at 3-year lows over the last couple of months, with the default MACD just about to crack to 3-year low. So the risk here is that the odds do favor movement lower, especially the more it stays below 54.70. Otherwise, the biggest test month to month, since we are using monthly charts, is whether the stock can hold above RSI 50. If it can stay and bounce on the RSI 50 line or something just above the 50 line, then it might stem this recent slide. But cracking below RSI 50 on the monthly time frame might be the reason for a major drop. So right now, still above 50. Maybe that's why it's not really dropping off heavily. So depending on whether it can hold that 50 line, we have to wait and see. Anything below 50, you can expect a continued push to the downside. So in conclusion, short term, yes, it's bearish, but long term, what happens here around RSI 50 would be more telling as to the depth of any correction or the possibility of a bounce if it holds on the RSI 50 support line. Eric Mwatha with Mwatha.com. As always, good luck, peace, and blessings. EACS.